The bulls held the critical support level today, and we closed the weekly chart on SPY above the critical breakout of the resistance. Does this mean the bulls are going to continue to run? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, starting out on the weekly chart of SPY, you can see we did close the week above the critical breakout of the resistance at SPY 407. So we are still in a bull trend on the weekly chart from the weekly bull pivot from the support at 380. And we now have the bullish breakout above 407, which could take us to SPY 427 and possibly even to 430 in the next few weeks. So as long as SPY is above this breakout, this is a bull trend of higher lows and higher highs on the weekly chart. There's just no other way to put it, or strictly following the price action in the trend. And the bears would have needed to break down through that support today on the weekly close, and they just were unable to do so. So yesterday I talked about the possibility that the market is trying to roll over. But if you're looking at the weekly chart, this is still not a rollover look. We held the support and we could continue to bounce from here. So jumping over to the daily chart of SPY, you can see that we did have another high volume day today, and we did go down 0.25%, and we did close just below the 20 daily moving average, but that is still a rising slope and we are still above the critical weekly support. So this is going to be another opportunity for the bulls next week to try to hold this critical support zone. Now remember, if SPY does break down below 407, it is very close to doing so. That does mean we're likely coming down towards 400, and then below 400, we're likely coming down towards the 200 daily moving average at 393. So you cannot rule out the possibility we do see a rejection and we start to go lower. But I'm telling you, on the weekly chart, that is a very strong trend. So you really want to put a lot of weight on weekly charts because they are more powerful than daily charts. So yes, on the daily chart, it is possible we do get rejected and go lower. But on the weekly chart, we're starting to see evidence that we could be getting ready to go higher and close that gap around SPY 421. So there's a very good chance this bull trend is going to continue marching higher. You can see all of these moving averages are starting to bunch up around this support zone. So that's either going to be a strong support or a strong resistance. So the very early leaders in the week next week, because it is only a 4-day trading week, are likely going to be victorious. If we gap up on Tuesday and start to run, you're looking for a bull trend week. And if we gap down and start to drop next week, we could start trending down towards that 200 daily moving average. So as I always tell you, follow the price action, because the market couldn't care less where you think the market's going, and the market couldn't care less where I think the market is going. That's why we know where the price action breakouts are, and we just trade according to what the price action is telling us. To the upside, we still have that critical resistance breakout at 414. So if we do start to break back over 408, we'll be looking for that as the next strong resistance. And the critical downside support will remain that weekly support around SPY 407. On the NASDAQ 100 triple Qs, we were down 0.71% today, and the triple Qs also gapped down, and at one point we were trading down below the rising 20 daily moving average of support, but we found buyers near the close and we did close back over that support. So we still have the price action in a bull trend, with the price action still above the rising 20 daily moving average, and we do have a gap to fill right around 303. So just like with SPY, if the bulls hold this support, there's a very good chance they're going to start pushing early next week. And that is going to require the break back over this resistance zone right around 308 to 311. And then we could start marching higher towards the gap fill at 322. Now, if the bears show up early in the week and we lose that support at 300, then we are looking for a retest of the double bottom breakout of the neckline at 294, and that is going to be an extremely critical support zone. So there is still the possibility we go a little bit lower and then still go higher, so you need to be flexible and follow the price action here. And if we lose the support trend line neckline breakout at 294, look for the gap fill below at 288. On the Dow Jones, we closed green today, going up 0.27%, and we're still within this bull flag consolidation, and we did reach the bottom of the Bollinger Band and the bottom of that flag right around that support around 334. We need to break back over this resistance zone around 339 to 340. And then we can see the Dow Jones going into a bull trend to continue higher into the 350s. If we lose support at 334, we could come back down to critical support at 327. But if you look at these Bollinger Bands, they're starting to squeeze, so we are going to get a very large move in the Dow coming in the very near future. On the Russell 2000 IWM ETF, we were up 0.28% today, and the price action did close back over all of the moving averages, and we still have the bull trend. So all we need to see in the small caps is a break of this critical resistance around 195, and then we should start marching higher into the low 200s. Critical support will be this rising 20 daily moving average right around 191.8. And if we lose that, we're likely coming back down to the critical neckline breakout at 188. On the ARKK ETF, we were down 0.38% today, and the ARKK ETF did bounce off of the rising 20 daily moving average right around 40.8, and we are back over this resistance just below 42. Now keep in mind, we did get a sharp rejection from the breakdown of the support trend line around 43, but then the bulls showed up at support, so you can't say that this is trying to roll over and die unless we break down below this support zone right around 40.4. So use that as your critical support, and if we continue to bounce from here, we can retest the highs at 44.5 and 45.7. On the VIX, we were down 0.74% today, and the VIX got crushed yet again and closed only 0.01 points above 20. So going into next week, we want to watch the VIX very closely. If the VIX starts crushing down below 20, that's going to continue the bull trend. And if the VIX bounces off support and spikes into the low 20s, then we're likely going to continue the pullback. On Bitcoin, we're currently up about 5%, and Bitcoin is trying to break out of the resistance around 24,500, but we still have resistance up here right around 25,000. As you can tell, Bitcoin is still in a bullish impulse, and it's now trying to break through resistance, but we're just not seeing the high volume buying that we usually see in a strong bull trend. So there is a very good chance this rally is going to exhaust itself in the near future, and we're going to see Bitcoin go through a correction. And I am looking for Bitcoin to come back down towards the 200 daily moving average. On Amazon stock, we were down 0.97% today, and Amazon is starting to lose that support zone between 98 and 97, but we did close just a little bit above 97, so we can't rule it out as holding until we see it break down. If we lose support, we are likely coming down towards 94 and then the gap fill at 90. And we need to break that critical resistance at 102 before we can go any higher, with the upside targets around 109 and 115. On Microsoft stock, we were down 1.56% today, and Microsoft did close the gap down here at 258, and we did find support at the rising 20 daily moving average at 257, and we now have a gap to fill above right around 262. So in Microsoft, I'm looking for a bounce off of the rising 20 daily moving average to at least fill the gap. And if we continue higher, we're looking for a resistance at 267 and 274. If we continue to the downside, we need to hold this breakout support zone right around 252 to 255. So that is going to be critical support if we break down below the 20 daily moving average. On Nvidia stock, we were down 2.79% today, and Nvidia did test the rising 20 daily moving average of support at 210, bounce from that level and close over the critical support at 213. So even though we are seeing Nvidia pulling back, it is still holding critical support. If we lose this support zone, it should be a very quick flush all the way back down towards 192. But you can't assume that's going to happen. You need the price action to break support. From here, we can bounce higher and close the gap around 219. And if we continue higher, I'll be looking for the gap for that 230.62. On Tesla stock, we were up 3.1% today, and Tesla did get the bounce from that support zone right around 197, and we're back over all of the resistance in one swift motion. We continue to see high volume buying in this stock because there's a lot of short sellers that still need to be squeezed out of it. So we are very likely going to continue to see impulsive price action to the upside all the way up to about 224 to 230. Stay bullish as long as we're above all of this support, and we need to lose the support right around 196 to get to the next support at 183. And as you can tell, we did find buyers at that level today, so we are likely going to continue to move higher. On Apple stock, we were down 0.75% today as Apple is getting rejected from that resistance around 156, but still finding support at the rising moving averages and the support zone around 150. So Apple is still a bull flag look between 150 and 156, and the breakout of this range is likely going to be another $6 move higher or lower, with the bull breakout being above 156 and the bear breakdown being below 150. Below 150, we should easily close the gap at 146, and above 156, we should reach our next price target at 163. On the financials, we were up 0.03% today as the financials did test the support trend line, and so far we are finding high volume buying at that support zone. The industrials were up 0.65% today, getting a decent volume bounce off of the rising 20 daily moving average and still holding on to the bull trend. The healthcare sector was up 0.89% today with a very bullish engulfing candle on high volume buying off of our support zone down here right around 130, which means we could continue to see the bounce come all the way back up to the resistance at 134. The healthcare sector was down 3.56% today as we continue to get rejected below all of our moving averages, and we're very likely coming down here towards this support at 82.6. So jumping back over to the S&P 500, remember tomorrow is a reduced week. We only have 4 trading days, and we did hold the critical weekly breakout on the weekly chart, so we still have the weekly bull trend. So overall, you need to stay objective and follow the price because there's still a very good chance we go higher from here because we still have an established weekly bull trend. We are absolutely crushing this market on the Stocks Channel Discord and in Bank Trade Alerts. So if you need any help in this market, you know exactly where to find it. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links below. And keep in mind, Bank Trade Alerts does send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. So thank you for watching, everybody. Have a great long weekend, and as always, I will see you in the next episode.